Hi everyone, welcome back to the Price Action Volume Trader channel. Today I'm bringing you a quick educational video talking about one of my favorite day trading indicators to use with Orderflow when I'm trading the CME futures. We're talking about Cumulative Volume Delta, or CVD for short, and I'm going to show you just the theory and principles of this indicator, and in general, just the ways that you would want to use this. Now, TradingView recently released their own cumulative volume delta indicator, which I'm going to make a comparison video between Sierra Chart and TradingView in the future. TradingView doesn't have true tick data, so their methods for calculating it are a bit different, as we're going to talk about in that future video. But I'm going to focus just on showing you on Sierra Chart what this indicator is, using real tick data on that, okay? So before we start, as always, please make sure to subscribe, hit the thumbs up, share the channel with your friends, bring people in to watch. That is how the channel keeps getting more recommendations with the algorithm and reaching a wider audience to keep bringing you all this. So let's start off with a few definitions. First of all, what is order flow? So order flow is the real-time data that represents buying and selling activity in the market, provides insights into the number of buyers and sellers, volumes of shares being traded or contracts, and the aggressiveness of market participants. By analyzing order flow, traders can identify trends, uncover hidden patterns, and predict potential price movements, okay? And there's several tools that we can use that are called what's considered order flow. The main ones that I like to use is Delta and footprint charts. And so now let's talk briefly about what delta is before we can dive into what cumulative volume delta is. So delta is the difference between the executed buys minus executed sells at each tick level in whatever market you're tracking. These are market orders executed. So basically, delta is measuring the aggressiveness of traders. If you're looking at a footprint chart like the one we have here, this is just a screenshot from Sierra Chart from the SP 500 Futures ES. You can see we have these candlesticks, and then there's bid by ask. So the bids are on the left, asks are on the right. So basically what this means is all these numbers are executed contracts to sell. These were market sell orders executed, and these were market buy orders executed, okay? So when we're measuring delta, we're looking at them side by side. So right here, we would have 20 buys minus 0 sells. That means we had a positive 20 delta at this level. This one, 30 total buys minus 17 total sells. We have a delta of 13 on this level, etc. So then if we take all these deltas from each level, we get a total delta for the candle, which would be right here, 86. And so you can see this screenshot. I took it at 6 p.m. Eastern time, right as the futures markets opened. So that means that the cumulative delta is also 86 because we're starting our first measurement here. Then on the next candle, we had a delta of 103. So 86 minus 103, now we have a cumulative delta of 17, etc. So the cumulative delta aggregates market orders, so aggressive buying or selling, and displays them on a graph. You can then use this graph to see how market participants are acting and compare it to current price movements. This will show how the efforts of aggressive traders are resulting. This continuous summation of the differences creates a cumulative delta chart that can provide valuable insight into market sentiment and potential price reversals. And this is how I said that we have it here. So normally you would have delta, cumulative volume delta plotted beneath the main price chart. And as you can see, just like the price scale, there is a scale measuring, in this case, the total number of contracts traded on the SP 500 futures market. So when we open here at 9:30 a.m. Eastern for the regular market hours, we start off at 0 delta, and then with each candle, we start seeing how the accumulation is going. So you can see here, right at the open, we had a big push up right around the 4,000 contracts positive delta. But then by the end of the session, we were closing at around a cumulative delta of minus 6,000. So even though you can see that price closed pretty close to what the opening was for the day, overall, there was more aggressive selling throughout the day, meaning aggressive sellers were more participation from aggressive sellers throughout the day, which at the end didn't really make price go much lower. So then this is, as we're going to talk now, you can do different analysis. This could be a sign that all this aggressive selling was getting just absorbed throughout the session, etc. So cumulative delta divergences. This is one of the main things that I use when you're using this tool for your analysis. So in general, CVD can be in 3 states compared to price. It can be in line. This gives us nice, smooth trends. So right here, going into Sierra chart, you can see I have the price graph for a regular trading session. You can see the open here at 9:30 a.m. Eastern time, and you can see delta open up at 0. But you can see how between the price chart and delta, it looks pretty symmetrical. There might be a few differences, like for example here, price made a higher high and delta was just making a slightly lower low, for example. But overall, you can see that the price movements from delta were mimicking the price action from the chart pretty closely. And so on these days, you have nice, you can see we just had very nice rotations just going down. Then we have this big chain and aggressive buying, and we had a very nice push up. But overall, you can see the days were pretty much synced up when it came to what price was showing, and also the cumulative delta showing us all the aggressive buyer-seller activity. Okay, then number 2, when cumulative volume delta is not in line with price, this could be indicating a lack of participation. So we have here an example of that. This part here would be price, and this is the cumulative volume delta. So for example, when we see that price is making a lower lows, but cumulative volume delta is making higher lows, this can indicate a lack of participation, and possibly price is going to be reversing. So in this case, we could be starting an uptrend. So usually when you see this, there might be some kind of important level down here, maybe the previous day's lows or a important historical level of support, resistance, etc., that price is just going to want to come tap that level, but then is going to get in sync with what the aggressive buyers in this case are showing, that they're holding the cumulative delta, making in this case higher lows. And then the opposite would be over here. If price is making higher highs, but then cumulative delta is making lower lows, then a lack of participation from buyers. This could be just a blow off top, and then momentum is waning, and you can see the sellers in the delta are starting to get more active by showing us a divergence down. So then this could signal the potential of just looking for an important level to hit, and then we could be starting to trend downward. Then number 3, cumulative volume delta is out of line with price, indicating absorption. So this one is one of the main ones that I like to use for. With cumulative delta, if you see, for example, that price is making higher lows, but delta is making lower lows, what this tells us is that all this aggressive selling is not really paying off, because price is holding higher and there's a lot of aggressive selling down there. So this is a sign that all these aggressive sellers are just might be getting trapped here, and then as price keeps going up, they might have to be bailing out. Or also remember that if you're going, in this case, short, and you have a stop loss order, that stop loss is going to execute as a market buy. So as price goes higher and starts triggering those market buys, that's also going to add fuel to the fire in terms of a potential push up. And as you see too, then you can see delta starting to get green and green as well, because we're getting also some market buys executed when we're hitting those stop losses as well. And then the reverse here, price is making lower lows and cumulative delta is making higher highs, meaning that aggressive buyers are not getting the traction of the follow through that they're looking for. And this could be a big passive trader with huge limit orders that is using all this aggressive buying liquidity in order to fill their orders. Because remember, in order for big players and institutions to fill in their orders, they have big limit orders resting on the order book, and they need aggressive traders, meaning market orders, to hit their resting limit orders in order to execute them and then have the follow through. Because the big players are the ones that are going to be determining what the future trends are going to be. So this here, for example, in this session, this is a nice example of aggressive buying absorption. If you look right here on this chart, from where this high is to where we end up, and then look how the cumulative delta goes, and we actually ended up right near the highs. So a lot of aggressive buying, and yet there wasn't a big follow through. You can see here, just continuous lower lows on price, and yet delta is just pushing up and up and up. Okay, so in this case, when we have a divergence of price and delta not lined up, usually it is a lot harder to get nice flowing trending movements, because in this case you can see that there's big limit orders to sell getting filled up here with no clear follow through to the upside. With divergences, it's hard because sometimes you can go through a long time in the chart with a lot of absorption. Like this absorption here went on from 1:30 in the afternoon all the way to the close. So we pretty much had 2.5 hours of just aggressive buying absorption here. So you just gotta use it as a guide for a general, just for the session. But it is a lot of interpreting and good timing in order to get in on these trades. And obviously with this, you're gonna be using other elements as well, not just the cumulative volume delta, but you can be looking at the volume profile, high time frame support resistance levels, etc. Here's an example we can see of lack of participation. You can see prices making higher highs and delta is just barely moving up. So this whole move up, there was not a lot of aggressive buying following or pushing this move. So price came up, hit a specific level, and then once they do get in sync, then you can see how we really just started going here. We had this support level right there. And then once the support level goes, then you can see also delta here got pretty aggressive, but you could see how this lack of aggressive selling participation going up into this highs was a sign that we could potentially be now reversing in this trend. And then we had a very big follow through down. And then you can actually see, then we got disjointed here, because then over here, now we're getting price pushing down, and a lot of aggressive buying was trying to push this up with no follow through. And then eventually here we got in line, and then after this we did have a follow through together as well. So these are signs for you to see when there's not the same follow through as what the cumulative delta is showing. Then that means that in this case there was, once the trend changed, once we broke these lows and the trend changed for the session to the downside, now you're getting this huge aggressive buying absorptions, and then just big market participants pushing all these prices to the downside. And then the last one that I also look for is individual candle divergence, which is when the same candlestick has an opposing bias between the chart and the CVD. What this means is if you have a green candle on the chart and a red candle on the delta, or vice versa. But don't blindly trade this, because context is very key. You're going to get a lot of false signals if you just try to look. And also remember, depending what time frame you're using, it's going to look different. Maybe you get a divergence on the 5 minute, but on a 2 minute or 1 minute is not going to show anything, for example. And that will be, as an example, like here, where you have market push down, then we're coming up into this just rising wedge there before we break down. And then you can see right here this candle, we just have a very tiny green buying candle, but we have a big red candle going down on the chart. So this means there's very little lack of buying participation, and there's price is giving us a strong push down. This is a good example of this. This is again SP500. This is a 5-minute chart with the cumulative volume delta, and you can see first on this, you can see a lot of aggressive buying, and yet price is pretty much chopping sideways. We're below VWAP as well. So when we're under VWAP, that's a general rule that the sellers are in control. And then you can see right here, for example, on this candle right there, we have price pushing up, We have a green delta candle here, and yet look at how bearish this candle on the chart looks like. There's not even a bottom wick because we closed right at the lows. So big red candle going down into this little consolidation, pushing and closing below. We have a lot of aggressive buying that's being absorbed in this area. And then we have this individual candle divergence of a big red candle with a tiny green delta, meaning in this whole candlestick there was more aggressive buyers than sellers, and yet look what the candle looks like. So then this is a good indication that we are going to have potentially a push down, and then you can see we closed below this. Now we're coming back, testing this as resistance, and then we had a nice follow through to the downside. Okay, so that's pretty much it for the video. Again, this is just a quick summary of the cumulative volume delta indicator. I have a lot more in-depth content on this in my day trading with order flow and volume profile course as well, if you want to check that out. And that's pretty much it for the video. Hope you're having a great week, and I'll see you all in the next one.